We have a call from Jack in Griffith. How are you doing there, Jack?
I'm very well, thanks, David. Thanks for taking my call. Look, firstly, David, I'd like to ask you your opinion on where the ASX 200 is going. And secondly, could Roger give me his opinion on JB Hi-Fi? I know he's a great fan of the company, and is it a buy at these levels?
Roger.
Just in relation to JB Hi-Fi, look, there are a handful of brilliant businesses that are retail businesses in Australia. There aren't that many. I think Woolworths is one of them. I think Oriton is another. I think JB Hi-Fi is another. These are businesses that are A1 businesses. They've got a great demonstrated track record of being successful. JB Hi-Fi is known as the category killer. It is the low-cost provider. It is the lowest cost provider in its class. That gives it a competitive advantage. The share price has come back since the highs. It is now below even my conservative valuation of about $20.04. My upper valuation is $23.86. And based on my estimates at the moment, I've got the intrinsic value rising at about 12% for the next couple of years. So nothing changes for me on this company. Of course, we've got a new manager in there. We've got someone new. So, and they've recently come out and said that they're tracking 5% below budget. Budget is a 17% increase in revenue year on year. They're behind that at the moment. They believe they're going to make that up over Christmas. We'll have to wait and see when the Christmas trading results come out, if they choose to release them. But at the moment, it's still an A1 business trading at a discount to its intrinsic value, and it's a category killer.
Business that it should have. The chart patterns haven't been as good, so I'm a bit cautious. Let's move to a question from David in Noosa. How may we help you, David?
Hi guys, good panel tonight for a good mix of answers. I'm just looking at Cochlear and Computershare and was wanting a valuation and thoughts on their future.
This is one of the few export success stories of Australia. You know, it really is an A1 business. It's an incredible business. Its intrinsic value has been rising at about 20% a year since 2003, 2004. The only thing I'll say is I personally believe it's expensive, and I'd prefer to buy it below 50, if I could get it below $51 or $52 for me, which may never happen. That for me would be a bargain as well, but a great business.
Ken from Brisbane, how are you doing there, boy?
Good, thanks.
How can we help?
I've bought Roger's book and I've spoken to Howard just this week at Tamilwood AGM, and I'm ringing about Mortgage Choice. It's got a return of equity of 30%, dividend of 9.5, fully franked, and a PE of 7, and it's got no debt. I just wonder what Howard and Roger think of it.
Ken, I look for three things in a business. I look for a discount to intrinsic value, I look for a great business, an A1 business, and I look for rising intrinsic values. The issue with Mortgage Choice is its intrinsic value has actually been in decline since 2007, and based on the forecasts that I've got, its intrinsic value is actually not going to change for the next 3 years, and it's trading at about its intrinsic value. So for me, there isn't a margin of safety. Yes, it's an okay business, but I'm not getting at a big discount to intrinsic value, and that intrinsic value is not going up. Now, if you agree with Ben Graham's philosophy, and that is, you know, or observation, that is in the short run the market's a popularity contest or a voting machine, in the long run it's a weighing machine, then you really want increasing intrinsic value because you want the price to follow that, and we don't have that here.
Joe from Brisbane, how are you doing there?
Good, thanks, panel. I'd like to talk about Data3 and also the panel's expertise on the next big IT thing, supposed to be cloud computing. Just a little bit of information about that, thanks.
Roger, you're looking a bit puzzled there?
No, not at all. No, DWS and Data3 for me are both two businesses in the IT space, IT service space, that I think are both A1 or A2 businesses and at a discount to their intrinsic value. In the case of Data3, only a small discount to its intrinsic value now, but nevertheless one of the few good IT service businesses. In fact, I was on a program on this particular channel earlier this evening, and I really think some of the service businesses are going to do very well, whether they're servicing the resource sector or businesses in their IT departments, and this is one of them. A good business trading at just under its intrinsic value at the moment.
What level is that?
Well, I'll have to look that up for you. Thanks for asking. Just 1 second.
You want me to take it while you're looking?
No, it's okay. It's right. I'm sure you will anyway.
Howard, while Roger's looking. It's
$9. So I've got an intrinsic value of $9.80. It's trading at, I've got the price $9.60 or thereabouts, so it's only at a slight discount. But I have that intrinsic value rising by about 10% a year for the next couple of years.
How can we help you?
Thanks for taking my call. I'd like to get outlook for Platinum Asset Management, PTM, and like to get Roger's valuation on it in the next year or so. I'm a bit worried about a high currency, what it can do to the value going forward. Thanks.
Well, just on the currency, Anthony, these guys hedge some of their... sometimes they short, they long, they go long, they hedge some of it, they don't hedge. So, in terms of the inputs of the currency, it's a very difficult thing to predict. But this business is worth considerably more than... Well, actually, I better just double-check that. Hang on a second. Bear with me. I've got an intrinsic value here. Actually, I've got the intrinsic value trading at about the price, $4.74, and rising by a few percentage points over the next couple of years. These are great businesses. I once owned one of these businesses, a funds management business, and the wonderful thing about these businesses is there's no plant, machinery or equipment that needs to be maintained. So all of the profits that are generated can be used to either be distributed to owners or to make acquisitions and the like. You'd assume, or you'd hope they're sensible acquisitions. So they generate a lot of cash. And in some cases, irrespective of the returns that they generate for their investors. So it's a very good business. Platinum's an A1 business. Kerr Nielsen, who runs this business, is regarded as a legend in the industry. Provided he stays there, there's no reason why you would think that this business is not going to continue to generate great returns. But remember, those returns are dependent on their performance, which is partly related to the performance of the underlying stock markets.
Okay. Anne from Brisbane, got a question for us.
Yes, please. Thank you. I'd like to ask about Leighton. I'm interested to hear Roger's valuation of it and where he thinks it's headed in the future. But I'm especially interested to hear of Howard's opinion with respect to the proposed takeover by the Spanish company of Hochtief, which I think owns about 55% of Leighton. I've bought some today and was planning buying some more to hold it for the long term, but I'm just concerned that I might be paying too much for it at present.
Roger.
Well, perhaps I'll start. Is that all right, Howard?
Yeah, go ahead.
I mentioned Leighton's on Peter Switzer's program on this channel a few weeks ago, and I believe that it's one of the few big caps that we have in Australia that's trading at or about its intrinsic value. It's now a little bit higher than its intrinsic value, but I have the intrinsic value rising from its current level by approximately 10.5% a year over the next few years. Now, one of the things that's happening on a global basis, remember this is a company that does operate globally, is there's going to be a lot of money, trillions of dollars spent on infrastructure in India in the next couple of years. If Leighton's can get some exposure to that, and here we are speculating, which is something I'm not prone to do, but if Leighton's gained some exposure to that, and I suspect that they will, and they win some business in India, then that's going to translate to even higher earnings for this company. They're not an A1 business. I've got them as a B1. But that doesn't mean that that's a bad business. It just means that they still don't have a very high probability of having any liquidity issues, but they're just not quite an A business.
Howard.